Bismillahirrahmanirrahim, and a good morning from London, and Assalamu alaikum wa rahmatullahi wa barakatuh. This is our IFAP number 8, which is on the topic of structuring Islamic social finance products. By this time, we should have finished our all the 10 IFAPs, but because of some other engagements, we could not keep pace with the frequency of the offerings of IFABs. So we are hoping that we would be finishing this season 3 of Cambridge Islamic Finance Structuring Master by the end of January or in February. And that would be the time for you to receive your Cambridge Islamic Finance Structuring Master certificate. Before this module, we have done 7 IFAPs, and those IFAPs are, I would repeat, this is a tradition that I would go through these titles. I'm sure by now you know the names of IFAPs by heart. IFAP 1, which was the starting point, was on the art of structuring Islamic financial products. IFAP 2 on WAD and its applications in modern banking and finance. IFAP 3 was on structuring Islamic investment products. IFAP 4 was on innovations in sukuk structures. IFAP 5 was on the use of mutuality and cooperation in Islamic finance. IFAP 6 was on the uses of law of large numbers and financial inclusion structures. IFAP 7, which was the last one, was on the use of technology in Islamic financial innovation. And today's IFAP is on structuring Islamic social finance products. And after this, we would have a couple of IFAPs developing profitable non-banking financial products and institutions would be the topic of IFAP 9. And we would finish this season 3 with IFAP 10 on advanced topics in innovation and structuring of Islamic financial products. This introduction should serve a good starting point for those who are starting this journey of Cambridge Islamic Finance Structuring Master today for the first time. I have been informed that today we have quite a few new members of the community from our Woman Eye program who are joining us for the first time. So I welcome them, and I hope that they would be able to finish these 3, including today's IFAP, and then they would continue into the season 4, which we would be starting hopefully in March. So this whole is these 10 modules. They are part of our Cambridge Islamic Finance Structuring Master. This program is presented by Cambridge Institute of Islamic Finance. Like any module, we have 3 learning objectives, and our today's IFAP has these 3 learning objectives. Learning objective number 1 is to introduce you to the necessity of developing commercially viable Islamic social finance products in order to restrict proliferation of interest-based financial products amongst the financially excluded and others. This emphasis on Islamic social finance is increasing with the passage of time. Especially the emphasis became very significant during COVID. One group of scholars called Islamic economists, they have been emphasizing on the social objectives which Islamic banking and finance should attempt to receive or should attempt to give to the wider stakeholders of Islamic banking and finance industry. And I must say that the practical side of Islamic banking and finance did not respond to these demands or these concerns shown by the community of Islamic economists, but until very recently. And as I said, during the pandemic, there was a kind of rethinking on this issue, and we started emergence of Islamic social finance products being developed and offered. Learning objective 2 is to highlight the role of donations in an Islamic banking system with reference to cash, waqf, and microphilanthropy. Learning objective 3 is to highlight some examples of best practices in Islamic social finance from different countries. And there are three learning outcomes attached with these objectives. The learning outcome number one is that we expect the participants to understand the process of Islamization of financial sector in a country and recognize that this is harder in countries where more financially included people are there. If a country is more advanced in terms of financial inclusion, the process of Islamization of financial sector is more difficult. If we have widespread financial exclusion, i.e. banking and finance sector is not very well developed, their introduction of Islamic banking and finance and Islamization of the existing infrastructure is rather easy. The participants are also expected to develop a fair understanding of Islamic social finance and what products should be developed to make Islamic banking and finance more relevant, especially after COVID era, which brought a lot of emphasis on certain things which were previously ignored. Those who are keen of you must have got the key takeaways to bring real reforms in Islamic banking and finance by developing a new range of Islamic financial products. So these are three learning outcomes which you should be able to achieve after these 90 minutes and after you have gone through some relevant material which you find interesting for your personal viewing and reading. The first point I made was with reference to financial inclusion or financial exclusion. It happens to be the case that a number of countries where Muslims are significant or in majority, or if I loosely refer to the countries which are part of the OIC, Organization of Islamic Conference, or the countries which are members of Islamic Development Bank, we find that in these countries, most of these countries, if not all, financial exclusion is a big problem. Overall, in the world, financial exclusion is not as big an issue as we face this in the Muslim countries. Now, financially excluded worldwide, they are about 31%. 31% of those who are bankable, not the overall population. And 69% are financially included. So this means that from amongst the bankable population overall, majority is now financially included in one form or the other. And when we use the term financial inclusion, now this is in its widest form. About 20, 25 years back, before the advent of fintech, we would refer to those who are doing some business with banks only. But now this is a term which includes the involvement or doing business with the non-bank financial institutions as well. A number of people, even if they don't have a bank account, but they have an account with an online payment system. So 69% of the bankable population is financially included. And 31%, which is almost one third, they still do not have anything to do with the formal financial sector, which is a big number. And those who are included, financially included, what they do, basically their activities are either related with saving for family. And when they save for family, they do this with a financial institution, with a bank or any other institution which is either regulated, or in most cases it is regulated, and this is a trustworthy institution. And some of them, they are included because they have got some help from a financial institution. So they have borrowed to support business, for example, or they have got a mortgage that is home financing. So they have borrowed for living or auto financing, whatever. So they have a relationship with a financial institution because of this borrowing kind of relationship. The first one is, they are saving some kind of money somewhere in a financial institution. The second one is that they are on the receiving end, i.e., they are borrowing money. And the third one, which is a sophisticated one, they are building a cushion against an emergency. Maybe they have an insurance or takaful kind of policy. And this is separate activity from banks. In a number of countries, there are state-owned insurance companies. Like in Pakistan, there is one. It's called State Life. This is owned by the government, and their network is very wide. Even in the areas where people don't have bank accounts, State Life would have its coverage. It also means pension schemes as well. In most cases, these are state-run pension schemes, but increasingly private pension schemes are being offered, and members of those, they are examples of those who are financially included. And this third category, mostly they would have a bank account as well. And this whole thing overall would have implications for poverty reduction in the country. Those who are part of the financial sector formally, incidence of poverty amongst them is observed to be low. Whether them being part of the financial sector has caused the reduction in poverty or not, this is something different. But at least there is a correlation observed between financial inclusion and poverty reduction. The development economists would come up with a lot of empirical evidence suggesting that financial inclusion actually reduces poverty. And hence, this is an emphasis of the multilateral institutions like World Bank, IMF, and other regional development banks. They would like to use financial inclusion as a tool for reducing poverty and income inequalities in the targeted countries. And this is actually one of the reasons that IMF, World Bank, and other multilateral institutions are interested in Islamic finance, because they have been led to believe that Islamic banking and finance improves financial inclusion, and hence it is likely that incidence of Islamic banking and finance would contribute to poverty reduction efforts in their member countries. Whether this is true or not, I would not go into this in this session, but this is the commonly understood phenomenon which has attracted the multilaterals, the ones I have mentioned. Now, in terms of numbers, this was 31% and 69%. There are, although about 4 billion, 3.8 billion people, they are now using financial services in one form or the other. There are 1.7 billion people who are still not using banking and financial services. And this provides an opportunity to those who would like to do something related with banking and finance, and especially Islamic banking and finance. As I said, in most of the countries where Muslims live in significance or in majority, there is a huge financial exclusion. So out of this 3.8 bankable, 1.9 actually are banked by the banks, and the remaining ones, they are using services offered by other financial institutions. So again, this is a very interesting phenomenon. The role of non-bank financial institutions is increasing with the passage of time, and I believe that in future there would be a lot more financial institutions which would be popular amongst the communities, but they would not be banks. So those of who are looking into starting a startup, this may be a good idea to look into this 1.9 billion people who are already in the financial sector, and they might be looking for some kind of innovative financial products for their need. And of course, as I mentioned, this 1.7 billion people, they are virgin from the viewpoint of banking and finance, and targeting them may not be a bad idea at all. So we said 31% financially excluded. In terms of the number, about 1.7 billion. Where are they located? Now, when we look at these 1.7 billion people, of course, they are located all over the world. It should not surprise you that there are people, even in United States and in the UK, who do not have a bank account. Small number, but still, there are people who are financially excluded, even in the advanced countries. But when we look at the incidence of financial exclusion worldwide, we find that China and India, Indonesia and Pakistan, Brazil and Nigeria, Bangladesh and Mexico, Vietnam and Philippines, these are important countries. In recent times, in these countries, financial inclusion has improved, i.e., the incidence of financial exclusion has gone down. For our reference, okay, for Islamic banking and finance, Indonesia and Pakistan, these are members of the Islamic Development Bank and the OIC, and so is Nigeria and Bangladesh. Brazil, Mexico, Vietnam, Philippines, and of course China, they are not very relevant when it comes to the Muslims, i.e., those who could potentially be interested in Islamic banking and finance. India is an anomaly. There are big numbers of Muslims. However, given the situation over there, we in Islamic banking and finance, we don't take a very optimistic view on the Indian market. Can Islamic social finance tools be used to reduce poverty? This is a view taken by the multilaterals, as I mentioned, by the World Bank, IMF, and so on. They would like to believe that Islamic social finance or Islamic finance in general can promote financial inclusion, and hence it can be used as a tool for reduction in poverty. The multilaterals, the reduction in poverty is big on their agenda. And of course, reduction in poverty and zero hunger, these are important SDGs as well. And lately, Islamic Development Bank and other Islamic financial institutions, they have started showing their eagerness to promote SDGs in their respective jurisdictions. In case of multilaterals, as I mentioned, Islamic Development Bank, it's very active on promoting SDG-related projects in the member countries. And in case of countries like Saudi Arabia is a very good example where the government is actively involved in implementing sustainable development goals. There are other countries which are important and active in this respect, like the UAE. COP28 took place in Dubai only a few days back. It finished. And that shows that these countries, they are hugely committed to SDGs. We are ending 2023. After this, there will be only 7 years left to achieve the targets of sustainable development goals when this period 2015 to 2030 would finish, and we would see how many and how much of sustainable development goals have been achieved and implemented globally as well as in individual countries. But the question, coming back to this one, can Islamic social finance tools be used to reduce poverty? And the answer, I would like to say yes, if we refer to these tools of Islamic social finance. There could be a bigger or larger list of Islamic social finance tools, but for the purpose of this module, let us focus on Zakat, Qard Hasan, and Waqf. These 3 tools, at least 2 of them, they have become very popular lately in the context of Islamic banking and finance. The one which is not still very popular is the middle one, Qard Hasan. Zakat is a tool which is now being used by multilaterals as well, like United Nations High Commission for Refugees. About 10 years back, started a global Zakat fund with a small amount of money. I believe at that time, they committed about 5 million of their own money, and their target was to set up a global Zakat fund of about 50 million. So in the phase 1, they got commitment of few million. I think in total they got commitment of about 20 million from the government of Qatar, out of which in the first go they got 5 million. So 5 million of their own money and 5 million of the money coming from Qatar. So they started this small global zakat fund. And now I think the zakat disbursed through this global zakat fund is about 250 million when I listened to them in one of the presentations they made here in London. And it's growing in size. This was first example of a global entity dispersing zakat, and not even an entity which has an Islamic identity. This global zakat fund is becoming bigger and bigger, and its usage is actually increasing as well. With this ongoing conflict in the Middle East, there would be a greater need for UNHCR, United Nations High Commission for Refugees. As you know that in addition to the deaths and casualties, a huge number of people have been displaced because of this conflict. And in this respect, UNHCR would be very relevant. So zakat, this is becoming a very important tool of Islamic social finance. And historically, the scholars have been talking about zakat and its sustainable use for poverty reduction. Qard Hassan is another very good Islamic social finance tool, although its application in Islamic banking and finance is still limited, but it has a huge potential role to play in Islamic banking and finance, and of course in poverty reduction as well. And then the third one is Waqf, again, Islamic Solidarity Fund for Development, which is a subsidiary of Islamic Development Bank and the United Nations High Commission for Refugees. They have now come up with a new fund. They launched it earlier this year, and they had a launch ceremony, one launch ceremony here in London as well. It's called GIFR, GIFR, Global Islamic Fund for Refugees. So because UNHCR, this is related with refugees. Hence, 25 million has come from Islamic Solidarity Fund for Development, and 25 million has been contributed by UNHCR to start this GIFR with a focus on the refugees. Their target is to have in 3 years or 4 years, $1 billion global Waqf fund for refugees. So Zakat, Qard Hassan, and Waqf, these three Islamic social finance tools can be used to reduce poverty. Poverty, as you know, it could be a short-term poverty, and this could be a long-term poverty. Short-term poverty is for those who were leading their life in a normal routine, but some calamity happened and they became poor. Like, there was an earthquake, and because of that, the certain number of people, they got displaced, their income or their access to resources got limited, and they became temporarily poor. When these people are helped, they come out of poverty very quickly. So for them, for example, zakat or Qard Hassan, this could be a good tool to reduce poverty amongst them. And then there is long-term poverty, for which there should be poverty reduction programs. So these three tools, it has been recognized by Islamic banking and finance that they can be used for poverty reduction. Zakat can be seen as grant money. In case of a grant, when even as an academician, when I was at Loughborough University, receiving grants means, okay, we don't have any obligation to pay it back. So it comes to you. Of course, you have to come up with a report that this grant money was used for this research project or that research project, but you are not obliged to pay it back. So this grant thing has a huge potential in any social finance kind of setup, because this is one way. You pay zakat as zakat giver, and zakat recipient doesn't have to pay it back. Actually, this becomes their money, and they can utilize that money in whatever way they want to. So zakat is a one-way kind of giving, and those of you, I'm sure some of you are involved in zakat collection, disbursement, zakat management in one way or the other, you will see that this has a huge impact on the communities which receive zakat or which are eligible to receive zakat. Qard Hasan, on the other hand side, this is like an interest-free loan. And I said it's like an interest-free loan because it's slightly more than interest-free loan. In case of plain vanilla interest-free loan, the lender would require you to pay the borrowed money back. In case of interest-free loan based on Qard Hasan, lender cannot require in its purest form. So it's a help to someone who is in need of money. And the understanding between the lender and the borrower is that the borrower would be returning the money when they can. And when they can, okay, this means that the likelihood of receiving the money back is rather low. So it is a kind of grant, but it's not exactly grant. There is an understanding that the money would come back. And there could be some moral pressure. In certain cases, Qard Hasan is used in a legal way whereby the borrower is required to return the principal sum. However, if there is a default, it is difficult to retrieve the money back from those, especially those disadvantaged who received Qard Hasan. Now, the third one, Waqf, this is actually sustainable financing. So zakat is a grant and it is in the nature of relief. Qard Hasan, this is an interest-free loan with some kind of possibility, not the full likelihood that the money would go back to the lender. And in case of Waqf, this is sustainable financing. A philanthropist would be setting up an endowment, and the income of that endowment would be used for the welfare of some beneficiaries. And those beneficiaries, they would not be, in most cases, required to return the money back to the endowment. If they do, the size of the endowment would increase. If they don't, in that case, given that the beneficiaries are receiving help from the income of the endowment, at least the size of the endowment would remain unchanged. In nominal terms, in real terms, this may go up or down depending on the increase in the value of the endowment. If, for example, the endowment is a property, if all the rentals of the property, they are used by beneficiaries, but over time, the value of the property, if it has gone down, this would mean that the endowment has increased in its value. Now, Islamic banking and finance and Islamic social finance. Many enthusiasts say that Islamic banking and finance should be based on the instruments of zakat, Waqf, and Qard Hasan. However, many people, they are of the view that given the importance and potential of zakat, Waqf, and Qard Hasan, they should be organized in a structured manner under not-for-profit business. And according to them, this is the real Islamic banking and finance. And I will give example of a non-Islamic institution. A lot of people who are working for Islamic banks and financial institutions, if someone tells them that, oh, you should be involved in zakat, waqf, and similar kind of activities with no profit motive, their one-line answer is that we are not a charity. We are a bank, and hence we have a profit motive, which is legitimate. But I would like you to go to this website. It's called Charity Bank, and this is a good lesson for Islamic bankers. When Islamic bankers say that we are not a charity, we are a bank, and a bank cannot be a charity, then at least you should give this example, that there are examples in the world, and this is not the only charity bank. There are quite a few other banks with similar kind of structure. I had the privilege of being a founding member of the board of directors of this bank when it was founded. It's not a big bank. It's a UK-based bank, which is regulated by FCA and FCB. And at the same time, this is registered with Charity Commission of England and Wales. So it's a charity, it's a not-for-profit bank, and its main mandate, I would just go to this About Us. So they basically empower charities And charities, they have their own social objectives. So we are entirely owned by charitable foundations, trusts, and social purpose organizations. So when we say we are an ethical bank, we mean it. There are a lot of references to Islamic banking and finance being ethical. And when you try to dig down, you find only very limited kind of traces of ethicality, which are there in the conventional banks and financial institutions as well. There's nothing uniquely ethical about Islamic banking and finance, to be fair. But when you look at this kind of institutions, you find that, they actually do a lot of ethical things. This is a bank. Look, when this was set up, Gordon Brown, he was the Chancellor of Exchequer. And when we launched it, Gordon Brown became the first account holder of the bank after the launch. So actually in the launch, he signed on the documents to open the account. And the kind of activities this bank is involved, okay, you can go through the website and you will be amazed how, if you go to Impact, for example, so they would have very interesting stories, go through them. And of course, this has impacted the whole country. It's a UK-based bank. It has made some advances, some loans to the charities outside the country as well. It's primarily Northern Ireland, Scotland, and then England. And of course, we have Wales there as well. I would, those of you who have interest in social finance, I would advise you to visit this website, and you will find some very interesting stories and facts and figures, which should encourage you to start looking into Islamic banking and finance as a not-for-profit business. And you should be then one of those who would say the Islamic banks should be restructured as the institutions benefiting from, number one, fee-based income, and no interest or interest-like income. So this is important for Islamic social finance. The promise of these IFAPs is to come up with some examples of innovations. And from here, we will go into some kind of possibilities to develop Islamic social finance. Let us look one example of fee-based income. So if someone comes up with a global, whatever you call it, you can call it a global fund or a global charity or a global waqf. It has the contributions coming from three sources. Okay, zakat, general charity, sadaqat, and waqf. And it's a global one. Now, looking into this figure 1 billion, many of you would say that this is too ambitious. Honestly, this is now very achievable given the technology. You have to come up with an infrastructure which should allow you to receive the incomings from all over the world. Because of the mobile phones and other wallets we have and the money transfer channels, it has become easy for people to contribute small amounts of money. So if one of you actually come up with a product which allows you to have a size of 1 billion over time, it won't happen overnight. Maybe in the year one, you start with a small amount of money and you receive only about 20 million US dollars, but over the years, 10 years, 15 years, you are $1 billion entity. So if that is the case, your fee-based income is what? You have a management fee structure of 220, 2% management fee. So you are managing this $1 billion entity. You would be receiving 2% of this one on an annual basis as your management fee, and that would cover your expenses and would give you some profit as well, small amount of profit. It may not be small, but at least in the years when the size of the fund, the size of the enterprise is small, 2% would allow you to continue on a sustainable basis for your operations. And the second component of this management fee is this performance-based component, 20% performance fee based on a threshold, i.e., if you generate a return of 20% on this 1 billion, then you would be, i.e., the fund manager would be entitled to a 20% management fee based on performance. And by the way, this is a very common fee structure in the alternative investments, in the hedge fund industry, private equity, and so on. So nothing is a kind of fiction or fabrication. This is already happening in different segments of the financial sector. Now, if this 1 billion is there, the 2% management fee would be 20 million. So I'm referring to this one, 2% management fee, 20% performance fee. So I'm explaining how this fee-based income could be interesting for any entity which would like to do this thing on a global level. So 1 billion is there, 2% of that is 20 million. And if you, as the manager of the enterprise, fund manager, if you have generated a 25% return on assets, which is 250 million, 20% of that one would be the performance bonus. So you will be getting 30 million as your fee-based income, which is not as good as some banks would like to receive, but this is something which should allow the manager to continue their operations on a sustainable basis. But the key is this number. You have to achieve this 1 billion mark, and it should be part of your plan. Probably, I think in one of the other examples, I would show that this 1 billion, sometimes people say 1 billion. Okay, this is too much, but you have to think big, because there are a lot of people who would target this kind of figure, and they would actually achieve it, and they would do some interesting things in the world. And I will give you example of this donations. When we say zakat, qard hasan, and waqf, and in this example, I've used this charity. So zakat, sadaqat, and waqf. And let us look into the donations, sadaqat. This has huge potential. It could be bigger than some normal size Islamic banks. If I give you example from the United Kingdom, I would again encourage you to go through the website of Islamic Relief. Islamic Relief is a British charity which was started in the 1980s. It was already there when I came to this country in 1991. A person called Hani Al-Banna, he was a medical doctor based in Birmingham. He wasn't based even in London. So Birmingham is a smaller city as compared to London. So he was based over there, and he started this charity. And now this has become the largest Muslim charity in the United Kingdom. It collects donations, money, and their operations are worldwide. I'm sure in one of the countries you come from, Islamic Relief has some kind of projects over there. So looking at the potential of donation in a serious manner, you would see that this can play a very important role. So donations could be in the form of general charity. So if I give some, if I'm in a good mood, if I give some money in charity, that can be managed by you. They could also be in the form of cash waqf. So cash waqf historically was for wealthy people to establish. But now this cash waqf thing, even if I have gotten only 1,000 pounds and I would like to put into waqf, then now there are products which would allow me to put my contribution into a bigger pot, and the money would then be used to develop a waqf portfolio. Again, from the United Kingdom. We here in the United Kingdom, we are a small minority, about 4 million Muslims living in this country. But we have quite a few good examples to share with the world. Zakat, we have been referring to zakat. This one chap, a young chap who went to Cambridge, my university, and he started working with, I think, PwC. After a couple of years, he said, I don't want to work with a consultancy like this one, or I don't want to work conventionally. And that young chap, he started what we call a National Zakat Foundation, National Zakat Fund, NZF. And he built it up. Now this is a sustainable enterprise. And he spent, I think, about 15 years developing it. When it was sustainable, he decided to do something more interesting in his life. So he resigned as CEO of the company, built the team, and now another team is running National Zakat Fund of the United Kingdom. This chap, he has actually decided to do something which is very interesting. He says, I would like to educate Muslims on what is considered as small things. They are big things, but he says, no, normally we don't give any significant importance. For example, he says, I would like to teach people how to pray 5 times salah in the best possible manner. And his model is that, in due time, people would be willing to pay for this one. He doesn't have greed. Okay, he would like, of course, okay, he has family. He would like to run his family. So he needs money. So this is his full-time job. He has started selling packages, online packages, or seminars or whatever, teaching people how to pray, how to fast effectively in the month of Ramadan, how you can do your Hajj to your benefit and benefit of your family and community and so on. This is an excellent example, and I'm sure because he started National Zakat Foundation from zero and made it a successful enterprise in United Kingdom, and he's going to be successful in this one as well. And then, okay, there is another entity called National Waqf Foundation or National Waqf Fund. It works on cash waqf basis. And now up in the north, it has a very interesting portfolio of properties which is under National Waqf Fund. The income from the rentals, they are used for beneficiaries. So when we are referring to the donations, okay, they could be in the form of cash waqf as well. And they could be in the form of incentivized donations through what we call raffles and lotteries, of course, in a Sharia compliant manner. Can we structure charity inducing donations based on lotteries? And the answer is yes. When we have this lottery kind of thing, in most cases, the gambling comes to our mind. But in the lotteries, the objective is not gambling, especially if we do it in a Sharia compliant way. And I'm sharing this structure with you, which is a Sharia compliant lottery structure, which can be used for Islamic social finance in a big way. Like any other lottery, there are n number or n thousand or n millions of individuals. They contribute money to this pool. For this to be Sharia compliant, okay, the prize money shouldn't come from this pool. It should come from an independent prize funder. And this big prize, the bumper prize, should be significant. So for the time being, we say that the money comes from an independent prize funder who would contribute to the prize fund, and those who will be winners out of the draw, they would receive this money. When you have this kind of incentive, this prize contribution to charity goes up in a significant way, and you can collect very interesting amounts of money through this kind of structures. By the way, the objective of these sessions is not to give you turnkey solutions. Okay, this is a product. Okay, you go and implement and have fun. We give you some ideas. Okay, this, for example, the first idea we have shared is this $1 billion zakat and sadaqat global fund, which could have some implications from the cash waqf as well. So a global fund of a very large size. This is the idea. Set up a global fund of a very large size, which would be sustainable if you come up with a fee structure which would allow you to operate on an ongoing basis. The second one is this donation-based model, and we are saying that this should be incentivized charity, donation-based lottery structure. And here we are saying that this structure would be Sharia compliant, halal, if the prize money doesn't come from the pool to which the individuals have contributed. If you use this money to give to some of the winners, of course, some of the contributors, only them 4, 5, 6, 7, 10, 20, 30, they would be winners. If you use this money to give prizes, then this is prohibited gambling. No doubt about that one. However, if an independent price funder is there, which doesn't get the money from here, okay, or which doesn't use the money from here and then give it to the winners, then this is Sharia compliant. In a lot of cases, this independent prize funder could be a government. And we are saying, what are the incentives for the prize funder? Before I go to this one, so what are the incentives for the prize funder? Now, if you have come up with this structure and this money, 10 million, for example, you say that we are going to use this $10 million for projects related with women empowerment. In order to generate this 10 million, we need 1 million. You are a registered charity in Senegal or wherever. You go to Melinda and Bill Gates Foundation. You do some of your research and you find that Melinda and Bill Gates Foundation has an interest in Senegal and they would like to fund some projects for girls' education. You go to them and you say that actually we have a program for girls' education. We can raise money indigenously, domestically, 10 million. But for us to do so, we need 1 million. And they say 1 million for what? It's a 1 million as a price. If you give us that 1 million, we have this whole system that would generate 10 million. If Melinda and Bill Gates Foundation had a credible interest in the country, they were thinking of spending about 50 million over a period of 10 years in that country, they would say that, this is a good partner. So over the next 10 years, we would commit less than 50 million, but we would start this process by just becoming an independent prize funder, and this would bring the benefits with which we were going to target anyway, i.e. women empowerment or girls' education. People say that where would this independent prize funder come from? So we said organizations like this one could be interested. It could also be the government in a country. If this is a project, this donation-based lottery aims at providing affordable housing to the people in the lowest rung of income, lowest level of income. And you say that, over a 10 years period, we are going to raise and spend 500 million on this segment of the society. And you go to the government, the relevant minister, whosoever, if you give us on a monthly basis $1 million equivalent of money, this will be $12 million on an annual basis. But these 12 millions would allow us to generate 100 million, for example. So the government would be very interested. This means, okay, instead of spending 100 million, they are spending only 12 million to fuel a mechanism which is market-based and which has huge social implications. So the point is that, what are the incentives for the prize funders? They could be multiple. In this case, we say that, even if those charitable organizations are not there, there could be some other more sophisticated solutions for independent prize funder to be interested in the project. So this here we have a lottery organizer. Okay, they collect 10 million in, say, 1 month or whatever, 1 week, whatever be the frequency. So this lottery organizer ends into an investment management contract with an independent company. This could be fund management company, investment management company. And they give actually this money to this investment manager to manage it on a long-term basis. Of course, this money remains the lottery organizer's money, or whatever is the corporate or social form of this one. Now, when we look at this thing, if it is a 30 years contract for subsequent investments, so every week, if 10 million, or every month, whatever be the frequency, if this money is being collected and this is given to this investment manager to invest for a period of 30 years. So if it is a 30 years contract for subsequent investments with a 220 management fee structure, which I mentioned earlier, then a 5% discount factor will generate present value of 2.77 million of total management fee of 12 million after 30 years. So you basically have this future income, and then you create this net present value of that one. The net present value of 2.7 million. A weekly price of 1 to 1.5 million makes economic sense for the prize funder, because over a certain time period, over 30 years, this prize funder is getting a lot more out of this investment management contract. So this would make sense. This would make some sense for someone to be interested in becoming an independent prize funder. And this would be of huge interest to those who would like to do something on a sustainable basis. Can donations be based on zakat? Now we are coming to zakat. Remember, okay, we started with zakat, qard hasan, and waqf. So can the donations be based on zakat? This is an interesting question. We call them zakat linked donations. And the example is, say, a billionaire. So a billionaire possesses 1 billion in zakatable assets. When we call someone a billionaire, that billionaire should have at least 1 billion, right, in total assets or in terms of wealth. So his annual zakat obligation would be 25 million, right? To be a billionaire, this is not an easy thing. Okay. You will have, this is very big heart of giving about 25 million in zakat every year. For a lot of billionaires, by the way, okay, giving away 25 million on an annual basis, this is, even though they are billionaires, many of them, they don't like it. I am aware of some of them. They would like you to come up with some solutions to reduce their zakat obligations. But this is a separate thing. We can discuss it on another occasion. If an Islamic financial product can be structured to help him manage his zakat obligations, it should be an attractive proposition. As a billionaire, I have to pay $25 million in the form of zakat on an annual basis. Someone comes to me and says, oh, we can help you. You will still be paying 25 million or its equivalent on an annual basis, but we can come up with a product which would help you, which would ease out your payment of zakat on an annual basis. One such product could be based on the principle of accelerated payment of zakat. And I think we have some members of this congregation today. They are in zakat management. So for them, this could be an interesting thing. This person's annual zakat obligation is 25 million. So you tell this person, you give us 10 times of this one, now 250 million, and we would manage this 250 million in such a way that for the rest of your life, you would not have to pay any significant amount of money in the form of zakat. This is the idea. So 250 million, which is an annual zakat obligation multiplied with 10, you accelerate your payment of zakat. And if you live for 30 years after this, we would manage it in such a way that for next 30 years, you would not have to pay zakat. And of course, okay, there are some minor details. If the performance of this asset which would be generated by this 250 million, if it generates less than 25 million on an annual basis, then you would have to have some kind of external assurance. It could be in the form of a takaful cover or whatever. And secondly, you have to actually keep on looking at the zakat obligation of this billionaire as well. You would see that in the years to come, the zakat obligation is 25 million or more or less. So these things are there, but the principle is simple. A multiple of the annual zakat obligation of someone you get from that rich person and manage it in such a way that over a certain time period, 25 years, 30 years, it generates a return which is enough to meet the zakat obligation of that person on an annual basis. Zakat linked cash waqf sukuk. And this is an idea for a global product for the OIC. Cash waqf linked sukuk, they are already being offered in some countries, especially in Indonesia. So this is called cash waqf linked sukuk. This one is zakat linked cash waqf sukuk. And this is a global product for the OIC, proposed one. 100 million players from the population of about 2 billion. There are about 2 billion Muslims in the world. So out of 2 billion Muslims, we say that for this product to work, there should be about 100 million players. By the way, these figures, sometimes people say that, oh, they are too large. The age we are living in, these numbers are achievable. The companies we use on a daily basis, like Amazon, you go to their website or wherever you can get information on that one, you will see the mind-boggling numbers over there. It's only that we, or most of us, we don't think that big. So 100 million out of a population of 2 billion is about 5 to 6% of the global Muslim population. And 5 to 6% of the population, this is not ambitious. You must have the right technology. The amount to be collected or donated, that is very, very reasonable as well. Each player plays $1 per week. If you don't like the word play, okay, we say that, pays $1. So there is 100 million weekly collection, 400 to 500 million monthly collection, around 5 billion annual collection. So 50 weekly prizes of 50 million should be underwritten by the member countries of the OIC. This is the trick. When we said the independent prize funder. So if you have, this global product with zakat linked cash box sukuk, there are 100 million players. This could be actually developed by Islamic Development Bank if they have this innovative thinking. Islamic Development Bank goes to the capital markets, international capital markets, every now and then to raise 1 billion, 4 billion, 5 billion new sukuk. This amount, 5 billion, 1 billion, 3 billion, they use for funding projects in their member countries. If they are really innovative, okay, so they can think of this one, zakat linked cash box sukuk. Creating technology, they don't have to create the technology by themselves. By the way, this technology is already in existence. The technology is there, they will have to pay for it. Otherwise, you develop it for yourself. And of course, this will require time. So this is the idea. If IDB runs it, it can generate 2.5 billion every year. When I mentioned over here, around 5 billion annual collection. In order to run this program, the evidence suggests that you have to spend about 52% of that one in this whole process. It's not the initial costs. Initial costs are very small. Out of this 5 billion, 52% would be eaten up by the system itself. I said roughly 50%. If that is the case, then this global zakat linked cash box sukuk would generate $2.5 billion every year for Islamic Development Bank to use it for whatever project funding in the respective member countries. And this, by the way, would be not the sukuk money like the bank is now raising. That money the bank will have to pay back. This is the amount of money which would be contributed to the capital base of the bank. So every year, 2.5 billion more of capital would be added to the capital base of the bank. And that would mean what? You are spending more on the social causes in the 56 member countries, and you are becoming bigger and bigger in size. So these kind of innovations are required for Islamic banking and finance to be more socially responsible, to become more significant in terms of its impact and significant in terms of its own growth. Of course, there are so many other tools which can be used, but today's IFAP was on Islamic social finance, and hence we have referred to zakat, we have referred to waqf, we have referred to Qard Hassan, and so on. I'm not giving examples outside the social finance domain. Today, we are just referring to the tools of Islamic social finance. So this zakat linked cash box sukuk, this is something which can be done by the likes of Islamic Development Bank with ease, and this would be an additional source of capital for the bank. And of course, this money would allow the bank to fund more and bigger projects of social significance in the member countries. When we are referring to this kind of thing, a lot of people would come up with a number of questions, and this is only legitimate to ask questions. And one question is, what are the Sharia requirements? And I have mentioned the most important Sharia requirement in this case is independent prize funder. In this case, basically, you ask, if this is being run by Islamic Development Bank, you ask your 56 member countries to contribute to the prize fund. against that contribution, for every country, there would be some allocation for the support of certain social projects. For example, if Uganda, which is a member state of Islamic Development Bank, they say that we are willing to contribute $2 million to this project. And if this 2 million is, say, 5% of the prize fund, then Islamic Development Bank would say that 5% of this 2.5 billion would be used, or 10%, whatever is feasible, for the support of social finance projects in your country on an annual basis. So in this way, everyone would be incentivized. Islamic Development Bank is getting 2.5 billion of added capital every year. The member countries, they are committing small amount, 1 million, and they might be getting investments worth 20 million or 25 million into the country on an annual basis. So there is an incentive. You just put $1 on the table and you get $5 in return. So everyone would be incentivized in this kind of project. The last one, we are looking into Qard Hasan, sustainable program of Qard Hasan. You must have noticed that all these things, they work with large numbers. We had one IFAP, the application of the law of large numbers in Islamic finance. So that is very, very keen. And because of the fintech, the large numbers, they have actually become relevant. They are not just fiction now. So sustainable program of Qard Hasan, the use of technology is imperative in this age of fintech. So whatever we do, we have to see the relevance of technology. So again, 1 million people to contribute at least $1 each month. The previous one was $1 on a weekly basis. So again, you just run the number. If you have a credible app, very, very powerful, secure app, which allows you to collect small amounts of money from very large number of people. So 1 million people to contribute at least $1 each per month. 1 million monthly collection. If 1 million are used directly for Qard Hasan, it will gradually be eaten up by the operators and defaults. So this is important. If the money we are collecting, if we give this money as Qard Hasan, we like it or not, this money, this $1 which we are giving to someone in Qard Hasan, over a certain time period, this would disappear. A default would happen somewhere sooner or later, and this would disappear. And because this is Qard Hasan, you cannot go after these people in a big way. That would be very harsh. And I had some Excel sheets I'm not going to show, given that only have about 4 minutes to go. But our model suggests that, if you use this money in a plain vanilla manner, i.e., you collect the money and give this as Qard Hasan to people, this would be eaten up by the system over a certain time period. Now, how to maintain the value of contributions? This is actually by way of investments. And there could be a number of very profitable ventures, but because we are referring to technology, nano financing is an excellent example of getting huge returns on small amounts or nano amounts of investments. One example of nano financing is in the top-up facility. In certain countries, still people you pay as you go SIMs because they're temporary SIMs or they are pay as you go. So sometimes I haven't topped up my balance. I would like to make a call to someone and I receive this message that you are out of balance. If you want to continue with this call, you get this small credit of $1, for example, or equivalent amount in whatever country I am in, then you get this credit of $1 and you would be able to continue with this call. And out of desperation, I say yes. So I get this credit, make the call. And of course, now I know that I am out of the credit. So next thing I would do, maybe not today, tomorrow, or day after, I would top up my account. When I top up my account, certain money would be taken away by this facility of offering me this credit. We don't see the returns on this one. On an annual basis, nano financing, depending on how much amount and what is the time period between the call, and the top up. It could be 1000% or 2000% return on this nano financing on an annual basis. I'm just giving you one example. So when you are collecting money for social purposes, you have to maintain the value of contributions by way of investing in certain activities which give you impressive returns. So that's it actually. With this one, I would like to say that we have focused on zakat, which is a tool for social finance. We have looked into Waqf kind of entities which could be used for social finance purposes. And of course, at the end, this program, sustainable program of Qard Hassan. So different innovative Islamic financial products can be developed and offered in different domains, in this case for Islamic social finance, but they can be used by other entities which are not only in social finance, but rather they are using this for commercial purposes. So with this one, this is 10:30. Thank you very much once again, and I hope to see you for the IFAP 9, which would be on developing profitable non-bank financial products and institutions. Assalamu alaikum wa rahmatullahi wa barakatuh. And before that, Happy New Year to you wherever you are.